Hello and welcome to the Earnings Review, your tidbits into company financials and operational insights. I'm Ibn Mabunda. Let's get started. On the program today, we are at the Zimplow head office, where it is that we are looking forward to a conversation with the Chief Executive, Imbanya Kujiga, where it is that we will be getting into the teensy-weенsies of their full year performance for the 2021 financial year. Don't go anywhere. So thank you for welcoming us into your corporate home.
Thank you, Ibn.
Fantastic. To cut to the chase, a resilient performance over the full year of 2021, where it is that your revenue scaled up about 53%, and of course your profit after tax moved 26% up. What were the major drivers of that? Of course, that would be in inflation adjusted terms.
Thank you, Ibn. We had a very good year as far as I can remember since I joined Zimplow. I think 2021 was a very good year for us. One thing that I can sort of like attribute as a major driver to the performance that we got is the team that I've got here at Zimplow. I think over time we have shown our aspiration to be better. We have shown that we would like to evolve as time goes by. So the team set some time in 2020, and we looked into the year. We sort of like saw what had happened in 2020 with respect to COVID, with how the pandemic had affected us. But we also saw how the rainfall pattern had sort of like encouraged more land to be prepared, and how the farmers were geared up for a good agricultural season. We also noticed or observed what the government was pushing for in terms of the infrastructure development from a road perspective. I think since 2018 we have seen a lot of roads being constructed. We have seen a lot of dams being constructed as well. So we sort of like took a position to say, you know what, yes, there will be disturbances in terms of supply chain, in terms of restriction of movement due to COVID. So our position was, let's ramp up. Let's have enough stock on the ground. Let's have the right stock. What do our customers require? So we had to engage, we had to intensely engage our customers to just find out or to gauge the demand and then bring the right stocks onto the floor. So that was one thing that we did. Over and above that, we knew that the demand was going to be a little bit over than what we had seen in the recent past. So we said to ourselves, we needed more working capital to just allow for the expansion in capacity. So we raised money in various ways to just ensure that we've got enough firepower on the ground. Like I've said, from a people perspective, we have been training, especially the technicians and the young engineers, just to ensure that we have got the right aptitude. We have got the people with the right aptitude and view and skill and exposure to help us be responsive to our customers. One thing that works in a business of ours, we're an equipment distributor. The after sales component of our business is so critical that if you do not have the right people, you may not be able to deliver the expected results. The trust and goodwill that you may have can easily be eroded. And those things in terms of capacitating ourselves, including just doing the general housekeeping facelifts, helped us put ourselves in a place where most of the customers that are involved in the business or that need the equipment that we sell, they started believing in us, and they started coming to us to pick up goods, pick up equipment, pick up spare parts. So I can say those have been the major drivers of our performance over 2021.
Box standard. At the same time, you've got a series of economic issues that are playing out in Zimbabwe. Among them, you've got foreign currency shortages and reports of backlogs with regards to the allocation of the foreign currency. Now, question would be, what portion of your revenue do you think is linked to foreign currency? And if so, what are the key areas of focus for the company?
Thank you, Ibn.
is actually in foreign currency, and how useful is it at meeting your foreign currency demands?
So the best part about 2021 was that there was more stability even on the formal channels of foreign currency allocation. So we were one of the businesses that benefited quite significantly. Our banks, including the central bank, were very supportive. The sectors that we operate, the agriculture sector, the mining sector, the infrastructure sector, those are all segments where the government has got an interest in. Okay. So it was only prudent for all of us to work together to find solutions in terms of following through on the objectives. Obviously, we talk about NDS 1. We had to follow through and support the government, as it were, from a foreign currency perspective. Over and above that, most of the farmers that we deal with, they are tobacco farmers. So they've got access to foreign currency. Some of the customers that we work with, especially on a Millibrand perspective, are from outside Zimbabwe. We export into the region. We export into Zambia. We export into South Africa. We export into Angola and other regional countries. We have got customers as well who we have got direct access to cash. So we have been able to work with those customers. Like I said, mines, they are the key exporters. They are the major foreign currency generators. So to a large extent, last year we saw quite a balance in terms of our ZWO USD cash generation, to the extent that it was almost balanced. At some point in time, we were at around 60-40 in favor of the USD cash generation. But as we approached year end, the ratio started skewing in favor of the ZWL. And obviously, with the bottleneck that is now obtaining with the delays in remittance of foreign currency through the auction, we had to now find a way of engaging with our customers. Ultimately, we rely on our customers for foreign currency, and ultimately we rely on the government and the banks for foreign currency allocations. So if we can't easily get that foreign currency, we have to engage the customer. We have to engage the bank. We have to engage the central bank. And those are the actions that we are currently doing even.
And you just mentioned agriculture. Your stats indicate that your volumes across that segment were very much in the north. Your farm egg volumes went up, registering, of course, a 48% revenue growth. Also moving in the same line is the Millibrand, which also scaled 21%. How do you explain the growth despite the erratic rainfall pattern and perhaps the dip in terms of the agricultural produce that Zimbabwe experienced over that particular period in question?
So our 2021 performance was largely driven by the 2020-2021 season, which we received normal to above normal rainfalls, unlike the 2021-2022 season, which we've just come from, okay, which will now affect us as we go into 2022 now. So last year, most of the farmers, they had good yields. If you look at the tobacco, the maize, the soya, the wheat as well, and the stability of the firmness of the producer prices quite helped or significantly helped the farmers in terms of having that spending power. So the previous year we were quite immune in that way, okay, from the erraticness of the or the vagaries that we have since not witnessed in the recent past. So it was a good year. It was a good year from a farming perspective. From a dryland farming perspective, maybe that's where we didn't see as much growth as we would have wanted. I mean, if you compare with the large-scale farming, where we are talking about growth of 48%, in terms of tractor volumes, unlike on animal drone implements, where we saw overall a 21% growth in volumes. It was mainly because when the rains came, because they were a little bit over than what they anticipated, a lot of crop then leached and the yields then dipped. But we saw from our export markets, because on the export front, we had quite a good year last year in terms of volumes growth. We saw numbers that we had never seen in the recent past. I know the last time we had such a good performance from an export front was in 2018. So it was quite a good year from that perspective.
Quite interesting. And now to talk about the recent additions, Scanlink and Trend Tire, which of course were as well in the black. How's been that integration over this very trading period?
Like when you're starting a new thing, there will always be birth pains. So there were some teething issues in terms of alignment. You know, you're bringing two organizations with different cultures from what you have. So the alignment of those cultures was one of the challenges that we had to deal with. I'm glad with the responsiveness of the teams from these two units, right, in terms of adapting, in terms of wanting to be part of the philosophy that we have driven here at Zimplow. So from that perspective, I would say it was more of, last year was more of building foundations. It was more of putting the platforms for us to do better. Another challenge which we faced with Scanlink and Trend Tire, because they joined us in the during last year, some of the strategies that we had put in place from a Zimplow perspective in terms of supply chain management, in terms of positioning ourselves into 2021, they joined in late to the extent that we were affected from a supply chain perspective. We couldn't bring as much product as we wanted, and there was already a bottleneck as we approached May, June, to the extent that we couldn't sell as much as we would have wanted. The demand was there. Our order book was quite firm, but we couldn't hit those notes that we thought we could hit with these two businesses. But looking into 2022, we are quite firm. We are quite positive, and we are confident that these two business units would provide more than what we bargained for when we're looking into this. Yes, people may look at it and say, but you know what, if you look at Scania, it's a very much premium brand, but in its premiumness, or it's in quality, yeah, the brand is trusted by the users. Yes, there's proliferation of other second-tier brands, but you can never compare Scania to any other brand. That's what I've seen. In fact, I had looked at it from a distance and thought, oh my God, yes, we as Zimplow, we believe in premium brands, and this Scania product is like this. So when I was driving all this while, I would see so many Scanias. I would always wonder why. And obviously that encouraged me in terms of the whole acquisition. But as we went by into the year last year, I realized why people prefer to use a Scania product. And I'm glad that those two units, Scanlink and Goodyear Trend Tire, are part of our stable, because they really fit in very well with what we are looking at into the future.
Creme de la creme. Now let's talk about another segment, which of course would be the mining and infrastructure segment, cluster, as you put it, where it is that we saw BASM register a growth of over 84% over the past year, a boon for the group.
Yes, so definitely we had a good year with BASM from an earth moving equipment perspective. you know, with any other business, it's all about relationships. It's all about developing such a robust relationship whereby people believe in the reliability, first, of your product, and secondly, of your people. So we have over time built up BASM to the extent that our people have created relationships and brought in the reliability that our customers were looking for. So to a certain extent, that confidence in our people brought in the demand that, or brought in that demand, that the volumes that we are talking about now. And it was good for the group, and it offered us access to new markets. It offered us new relationships. And going forward, I believe it's also a platform for us to build on as we move forward.
Now, still speaking about that very same brand, in your financial report, you did, of course, highlight and allude to the fact that that arrangement that you had for distributorship that ran for over 50 years had come to a conclusion. Would you want to highlight the implication of that very move?
Yes. So in terms of that relationship, Eben. So, you know, like we were just talking about the volumes growth and the good performance that was coming through from BASM. It was something that we built over time at BASM. Obviously, we had lost our last race sometime 5 years ago, and we had to build from scratch to ensure that we are where we are now. But obviously, we're working with partners and with suppliers that have got their own operations and own strategies. Whilst we were doing our own strategies, perfecting our way into this market, little did we know that we were actually doing ourselves not a very much good favor by overperforming. Because once you overperform, once you show the attractiveness of a product, you would have sort of like brought in more competition, more or less. But yes, the relationship is coming to an end. Obviously, it's the suppliers thinking that they need to change their strategy in terms of the way they operate. And from a Zimplow perspective, we have always known that position, and we had always planned or prepared ourselves for such an eventuality. We are into distributorships, and as a business that is into distributorships, the things that we own, our people, the infrastructure, and our balance sheet. And those are the things that gives us the capability to deliver a reliable product. The one thing that we add is the brand, to ensure that we have got a supplier that supplies us with the right product that our customers will need. But even if we get a product, we can make it the right product to give to our customers. So with the experience and exposure that we have gained over time, we are not really worried per se, if I may call it that. Yes, there will be a bit of a dip from initial onset as we transition after the 30th of September. There will be a dip because you are bringing in a new product, new philosophy into the market. You are trying to talk your customers into that new product. But we have been there before. We have seen these dips and troughs whereby we had to dig ourselves out of certain situations. But this is a better situation because we are coming from a very high position or a position of strength because our balance sheet is quite strong. We have got the skill, we have got the infrastructure. What we just need is a new supplier to take our business forward.
And you sound optimistic that perhaps you should be able to fill that gap perhaps in the medium term, I guess?
100%. So we still have got up until 30 September to run with CAT. Okay. So it's enough time for us to put in
actually
place
look at alternatives and possibilities
100%.
that can be explored in that regard. Let's talk about the growth prospects where the power or the power make front is actually concerned, especially perhaps where the solar possibilities would be concerned. What growth prospects do you envisage where that is concerned?
So if I look at the power make unit, it's a business that supplies alternative electrical or power equipment in power generators, in solar equipment, and we also are a distributor of Perkins, the official distributor of Perkins products here in Zimbabwe. We also supply other electrical components that are required for major installations and power plants. So this business, we have sort of like relied on one segment of our alternative power, which is generators, to the extent that we felt that as the world tends to greener options, we needed to go with it. The capabilities from a skills perspective, we have got some of the best engineers from an electrical engineering perspective. We have got some of the best capabilities from a supply chain perspective. We, as Zimplow, we deal mostly in the supply chain. We have worked with technical partners, with people that if we need to work on a big project, we can draw certain skills from. So we engaged a partner outside the country, which in Long Island, and we believe that we can be able to offer or up to any scale of solar equipment. Already we have built up the brand, we have built up the capabilities and at last year, obviously it was the first year where we traded in this new product. So we had quite a good demand, we had quite good growth. And looking ahead, we believe, lately, it's unfortunate that the grid has been unstable. So when the grid becomes unstable, for us, it's an opportunity.
That means business for you.
It means business for us, and it offers us an opportunity to give our customers the alternative power products, such as the solar, the generators. So we have seen the demand picking up, and we are glad. We have planned for this, and it's working for us.
Now, what's been the impact of the Russia-Ukraine war, perhaps on your operations, if at all?
So I'll speak maybe from a general perspective, if I may. So you would see that most of our wheat was coming from Ukraine. There was the potassium, I think, from a fertilizer perspective, that was also coming from that side. Russia is a major supplier of oil or producer of oil. So we had seen the fuel prices going up, like it's almost now over $70 per liter. It's not good for the farmer. The fertilizer, the inputs that are required, the fertilizers, the chemicals, they have almost doubled in terms of price. It's not good for the farmer. Okay. It doesn't provide that incentive to the farmer to go into considering the exit prices that sort of like obtaining in the market currently. So from that instance, you would see that the farmer sort of like pulls back from spending. Okay. So that has been one reality that we've started seeing. Demand is sort of like slowed down. Obviously, there are other factors that are affecting the customers or the people that we work with from an agricultural perspective. But if I may go to the mining infrastructure or the mining side, you would see that the prices for minerals, for metals, continue to firm up, which is also an incentive for them to increase production, for them to continue to do what they've been doing. So in a way, if there's more production, there is more equipment that needs to be maintained. And that is good for us. So to a certain extent, it's not all bad, but to a large extent, because the agricultural cluster is a big component of our business, it really affects us. And from a individual, personal perspective, because we have to drive every day, the fuel costs are really hitting in our pockets.
Right.
So that has been the impact of the Russia-Ukraine on a general perspective. But from a supply chain perspective, obviously there were certain components that we used to rely on from a Ukraine perspective, to the extent that we have had to find alternatives to just find a way of bypassing those gaps.
Right. Now, how are you leveraging new technologies in your entire business offering?
So we, I think since I came in as CEO, we have been trying to ensure that it's all about this world. It's all about the fourth industrial revolution. And from an equipment perspective, you would see most of our equipment is getting automated. If I talk maybe from I've always been talking about telematics. So most of our tractors, especially the high horse, the bigger range, they come with the latest range of technology, whereby you can easily plug in the stuff, the task that it needs to do. Off it goes, undertakes the work. But we have also gone down to the next level of tractors to say, you know what, how do we ensure that we plug in the telematics, the GPS capabilities into the... So we have brought in a new system which we'll probably launch as we go into ADMA. And I mean, it's if for farmers who are interested, it's an opportunity for them to come and witness. It will be very competitively priced. It's one of the applications or packages that we feel at this particular time is one of the best in the market, but at a very competitive price. So telematics, GPS capabilities, we are going to be pushing very hard on our tractors with that. On a earth-moving equipment, even on the tracking side, especially with Scania, we have got this application called C300, which sort of like tells you even the driver behavior. When the driver goes full throttle or goes constantly pressing the accelerator to the extent that it can damage the engine, it then gives you a notification. Okay. So it helps in a lot of ways to even point you out to the potential problems that you may face in the near future. So for preventative maintenance, it's a good system. We have got other programs or apps that we have been introduced from an equipment perspective to help on the fleet maintenance, on the operator behavior, because the operator is if you want to ensure reliability of your equipment, the operator is a key component of so do not underestimate their capabilities to ensure that a premium brand lives to their premium nature. So that's what we're trying to be doing, and we are a premium supplier of equipment. We would like to give our customers the very best from a quality perspective, and with technology, with the way even our principals are developing. Lately, I think from a Scania perspective, we've been talking about electrically driven trucks, buses, which will be coming through in the near future. Obviously, with Africa, we have to look at it and say, do we really need that product at this particular point in time? Maybe not. We need to stabilize the energy side of things before we think about those. But from a Zimplow perspective, we have been gearing ourselves. I mean, obviously, with the new units that we have added to the group, we need a robust system We need online capabilities for our customers to access our products. So we are developing, we are working in the background to be able to offer our customers such kind of services in the near future.
Sounds pretty exciting. As we draw to a close, you've got an economy that is right by the edge. You've got an inflation that is soaring, having come in at over 130% in the month of May, with very strong indications that things could actually continue on that great trajectory. You've got a fast depreciating local currency, among many, many other issues that Zimbabwe is facing. What is your outlook, considering that we are also headed for an election in 2023?
So it's not a new position that we're in even. I think we have been there before. It's like deja vu, if I may call it that. So we are confident. I think the one thing that I have to give it up to the authorities, that they are trying to put measures in place to ensure that we find solutions to our own problems. That being said, we are aware, maybe from a foreign currency perspective, that we need, like I said, we need to be engaging our customers. We need to be finding options to ensure that we have got sufficient foreign currency generation. We export products through the Miliband side. We have got customers who are foreign currency earners. So we have to be very close to that ecosystem to ensure that we build this resilience within our business model. With our top customers, we need to ensure that we live for another day. Yes, in the last year, we were very optimistic, and therefore we went a little bit over the top in terms of preparing for the year. But this time around, we obviously have built up capacity. What we are focusing much more on, considering that we have got softening currency, if I may call it that, we have to go for value preservation. So we are focusing mostly on value preservation. That is our number one priority. We have to conserve, or we have to keep what we have already put in the bank. And if there are opportunities that can come our way, that will give us that lift off, we then go for them. So we are more or less going for a disciplined type of way of getting into this market, or into the year. We are looking at ways in which we can take advantage of the various opportunities without stretching ourselves, without tying ourselves to deals that can go either way. We want to focus on the value preservation thrust.
Well, thank you very much for the engaging conversation, and good luck in the ensuing financial season.
Thank you very much, Eben. And once again, you have come back to this place, and I hope you enjoy coming here, and we can do this one more time.
Always a pleasure, sir.
Thank you very much, Eben.